All right, let's dive in. Today, we're mapping out what could be in store for Bitcoin in 2026. 2025 was this incredible euphoric year that took us to brand new highs. But now the market's in a really interesting spot. The next 12 months, they could honestly define this entire cycle, so let's break down what might be coming our way.
So, we've just come off this massive bull run, right? And now the market's pulling back. It's got everyone asking the exact same question. Is this just a healthy correction, a little breather, or is a deep, painful bear market just getting started? That's what we're going to try and figure out.
To figure out where we're going, we first have to know where we've been. And just back in October of 2025, Bitcoin absolutely rocketed to a new all-time high of about $126,000. That was the peak. That was the euphoria.
Now, fast forward to where we are at the end of 2025, and we're sitting around 88,500. So that's already a 30% drop from the top. It's a pretty significant pullback, and honestly, it sets the stage for everything that's about to happen next.
Okay, before we can even start building a forecast, we need to understand the tools of the trade. What do analysts actually use to try and make sense of all this? So, in this first part, we're going to cover the main approaches they take to navigate the market.
First up is something called technical analysis, and the best way to think about it is right there. It's like reading footprints in the snow. Analysts look at charts, they study old price patterns, all based on the idea that human psychology, and therefore market psychology, tends to repeat itself. They're looking for clues in the past to predict the future.
And then you have the other side of the coin, fundamental analysis. This has nothing to do with charts. It's all about the why. Why does Bitcoin even have value to begin with? Here, we're looking at its core DNA. Things like its fixed supply of 21 million coins and how many people are actually using it to figure out what its real long-term worth might be.
Now, when we talk about fundamentals, there is one event that is more important than literally anything else. It's called the halving. It is hard-coded right into Bitcoin's programming, and about every 4 years, it slashes the supply of new coins in half. This predictable supply shock is the engine. It's what drives Bitcoin's huge market cycle.
And what's so fascinating is how this pattern has played out with almost spooky reliability over time. The year right after a halving, we get a massive bull run. That was 2025. Then comes year 2, the correction, the big bear market. And guess what? That's right where we are now in 2026. After this, we usually get a year of boring, sideways trading, and then finally, the next halving kicks everything off all over again. So this brings us to the big showdown for 2026. On one hand, we have this powerful historical cycle that's telling us a deep correction is supposed to happen. But we also have a brand new, incredibly powerful force in the market. Let's unpack that.
So here's the debate in a nutshell. The bear case says, look, history doesn't lie. A painful, drawn-out bear market is coming. But the bull case argues, hold on. Maybe this time is different because of the absolute flood of institutional money coming in from things like the new spot Bitcoin ETFs. And you really can't blame the bears for thinking that way. I mean, just look at the data from past cycles. A staggering 86% drop in 2014, 73% in 2018, 64% in 2022. The historical precedent is crystal clear. When Bitcoin has a bear market, it corrects hard.
But here's the counter-argument. $40 billion. That's the amount of Bitcoin that has been soaked up by just one of the new ETFs, the one from BlackRock. This is a massive, brand new source of buying pressure from what we call strong hands. These are long-term investors who are way less likely to panic sell. This force just didn't exist in any of the previous cycles.
So how do you put these two opposing forces together? How do you make sense of it all? Well, in this section, we're going to lay out a potential roadmap, blending those historical patterns with these new market realities. We think the year's going to play out in 4 distinct phases. So here's the journey we see. First, a Q1 tumble, as people who got in early start to take their profits. Then, we hit the summer doldrums, just boring, sideways price action that's designed to test everyone's patience. This all leads up to the most critical phase, a final, painful washout event that shakes out the last weak hands and forges the ultimate bottom. And then, finally, a recovery starts to take hold late in the year, setting us up for what's next.
So where does that bottom land? Well, our analysis is pointing to a potential bottom around September of 2026, with a price target somewhere in the neighborhood of $62,000. Now, that would be a correction of about 50%, still very significant, but maybe not as brutal as in the past, probably thanks to that institutional cushion we were just talking about.
And this is where that famous Warren Buffett quote just perfectly captures the mindset you need for that ultimate bottom phase. These moments of capitulation, where everyone is panicking and selling, historically, those are the absolute greatest buying opportunities. It's all about having the courage to act when sentiment is at its absolute worst.
But okay, how do you actually spot the real bottom? It's tough, but analysts are going to be on the lookout for a few key signals. A giant spike in selling volume, the Fear and Greed Index, which is a popular sentiment tracker, dropping to rock bottom levels. You'll see mainstream headlines declaring that Bitcoin is dead again. But most importantly, analysts will be watching the blockchain itself to see if the biggest investors, the so-called whales, have started buying again in a big way.
Okay, so knowing the roadmap is one thing, but actually acting on it, that's a whole different ballgame. So for this final section, let's turn all of this analysis into a simple, actionable game plan that you can think about.
Here's one way you could approach the year. Phase 1, from about January to May, is all about playing defense. Don't be a hero trying to catch a falling knife. Just preserve your capital. Then, Phase 2, from June to September, that's your accumulation window. That's when you can strategically and systematically build your position while fear is at its highest. And finally, Phase 3, for the rest of the year, is simple. Just hold on and ride that initial recovery.
But of course, this isn't one size fits all. Every investor is different. This just gives you a simple way to think about it. A more conservative approach might mean a smaller slice of your portfolio goes to Bitcoin, while an aggressive investor might take on more risk for that potentially higher reward. At the end of the day, you have to know yourself and your own risk tolerance.
And that really brings us to the final question, doesn't it? The roadmap is laid out, the data gives us a guide, but here's the thing about bear markets. They are designed to shake you out. They are emotional roller coasters that test your conviction. The map is clear, but the real challenge, the question is, will you have the discipline to actually follow it when the pressure is really on?